As Dave mentioned, he is absolutely correct that we are seeing one asset perform above all of them, which is DOT, which is what he kind of called the ball on. And we'll get the feedback from the week of performance and the consolidating event triggers that kind of seem to be happening. And so with that, I will turn it over to both of you.
All right, well, I'll give my, I guess, my 3 cents worth today. Now, without getting political or, I guess, party-sided, which I'm really not, I have to take note that, as one convention ended and another started, then in Kenosha, you have a police officer, which Kenosha is about 45 minutes from Chicago, shooting a guy in the back, like plain and simple. And then the riots there, which I guess have gotten national coverage. I don't know much of the story, but I also noted last week that, my pick of the week wasn't as good as David's. I'll give credit, but it was Tether, where everyone was saying new highs, new highs. I just started to see little things that stuck out. Like I put it in the Discord about Apple's market cap hitting 2 trillion when there's 30 plus million people unemployed, or the Tesla breached that, gosh, $2,000 a share. I guess I didn't think I'd ever see the day where one share of Tesla was worth more than 1 ounce of gold, but hey, we see it today and yesterday and the day before. And I guess when I start to see things like that, I'm not calling for a top. I'm just simply saying that Tesla to me is essentially the proxy for frothy assets. And, has Bitcoin come down a little bit? Sure. That means that generally speaking, that's takes its weight on blockchain. So I guess the US dollar value of Ethereum and Litecoin and Dogecoin and Chainlink and blah blah Tizo, whatever the hot ones are, that has fallen too, simply because Bitcoin price has fallen. And I just believe that with the election coming in less than 100 days, that there could be some, there's been in the past 6 months, there's been a pile out of US dollars into things, crypto, gold, silver, crude, wheat, corn, Tesla, Apple, whatever. And you could see some of that, I guess, profit taking from those that were fortunate enough to buy and taking some off the table. I'm not saying a crash or anything like that. I don't know what major catalyst would really push the general assets class of everything, I guess, further. And as I said last week, note the dollar, and the dollar index is going to, it's come down quite a bit since March. And again, people in times of panic for some reason or in times of nervousness tend to buy the dollar. Why? I'm not going to get into it, but that would be kind of my 2 cents, Christina.
Thanks, Steve. Dave, your thoughts?
Well, I think the funny thing is if it wasn't for the fact of what was going on with Polkadot literally going live this week, which is one of those famous crypto buy the news events, because they tend to happen in crypto and not other asset classes. I probably would have agreed with Steve. And when he said Tether, what he's really saying is he expects a pullback in the crypto sphere. He did it in a way so as not to, to be a little bit more tongue in cheek, but that's the reality. He could just as easily have said nothing or short, the entire cryptosphere. And I think that his reasoning was sound, and it's in point of fact what happened. The truth is that, late summer doldrums, we've seen this before. Even in the bull year of 2017, there was a pullback in August. The proximate cause was something out of China, but it doesn't matter what the proximate cause is. These things happen, and it's perfectly reasonable to look at it that way. I mean, gold has fallen, silver has fallen, all the safe havens have fallen. You could make an argument it's because people think that things are going to get better. I think that's a bunch of horse shit. I think the reality is people take stuff off the table, and trees don't grow to the sky, or pick your favorite platitude about trading, but it's not all one directional. Regardless
Right.
of what Dave Portnoy says, assets don't only go in one direction. So there will be corrections along the way. The only issue is, what are those assets? Well, what's propelling Tesla and Apple and the Nasdaq in general are retail investors that still can't work, that still have that are basically piling in. And it's like they get another set of stimulus checks, it's going to go further at some point until somebody decides they want to take profit, in which case then you end up with a stampede, and then you have what is titularly called a correction. Crypto is a bit different, right? Because the use cases and what's going on in the actual market have been the unlike the real economy in terms of who's buying stuff, who's shopping, who's whatever. The macro story for most crypto assets has been unabashedly bullish. Now, some of it is bullshit. I mean, no question. The notion of yield farming, there's a lot of shuffling the deck chairs on the Titanic. There's a lot of it's not a Ponzi scheme because it's not, it's not intentionally set up that way. But the reality is people who have been in, who know how to extract yield, make money because other people want to get in. And it tends to function in that same regard. Now, that said, there's a kernel, more than a kernel. There's actually some real usability there. There's some real there's something there, but right now it's more about speculate, basically providing an outlet for speculation. So all of that those things are happening, and you're going to expect downdrafts. I actually expect this coming week to be more of the same. When you look at pullbacks, Bitcoin feels at between 12 and 11,000, pretty much exactly like it was between 9 and 10,000. It wasn't all that long ago that we were talking about, what was it, 7 or 8 weeks, Steve, between 9 and 10,000 before it did anything. And we kept saying it's got to break out one way or another. Who's to say that we're not going to have another 7 or 8 weeks going into the fall where Bitcoin is between 11 and 12. I'm not saying that's going to happen. I actually don't think it's going to happen. I actually think we're going to get a move higher.
Yeah, not with the election. I think you have to factor in that we're in the 100 days before the election. So, but I without that, this is what I love though, is braiding it all together, right? I completely agree, and I'm going to go back on mute and let you finish. But I would say with that event trigger of the election, that we won't see it just be sideways for the next 7-8 weeks. I don't think.
Well, I don't think so either. I mean, the election is really strange when it comes to crypto and the real economy has way more at stake in the election than crypto does. Way more. I mean, crypto is much more about monetary policy and about the globe and about the march of technology. I don't think either candidate is particularly bad or good for Bitcoin. I think Bitcoin is doing what it's doing, and I don't think either candidate is going to cut back on the monetary spigot. So I'm not really sure. I mean, yeah, the Republicans will be more deregulatory in general, but also more nationalistic. So that's probably offsets. The Democrats have some pro-crypto candidates in there. They're going to certainly be printing piles of money, so maybe marginally for crypto, they're better. The regular stock market, I mean, there's a massive difference, right? Tax rates are going to be a massive difference, and that will matter. Now, it will also matter what where you are, because there are some companies who will be absolutely slaughtered if one wins versus the other. Like insurance companies have a huge vested interest, right? Particularly health insurance companies.
Can I ask a question to frame this just really quickly? Basically, what I say as the voice of Coin Genius out to the public audience is essentially, as we're analyzing the global economic engine, when you have 12 years of quantitative easing and then you print $7 trillion, it doesn't matter which candidate wins. There is going to be a correction, and it's going to be really ugly. There's certain sectors, certain technology or healthcare, renewable energy, cannabis, things like that. There are certain sectors that will shift and change. Banking industry obviously will shift and change. And that's really what we're quantifying, is this landscape as it evolves. So if there's anything that you can tell me in your predictive nature of of that kind of sector, that would be really helpful, because all I can tell is, to echo your sentiments, we're shifting the chairs on the Titanic.
I mean, look, I personally think that what Powell says on Thursday is more relevant than a lot of other things. And I think the odds that he's going to say anything that's going to surprise people are really slim, right? So my gut tells me that he's going to be ridiculously dovish, and that should matter. But if it wasn't for the fact that gold's been falling for the last 3 days, I would say that it would be a sell on the news sort of deal. But it hasn't rallied, which makes me think that you could see a re-engagement of the crypto gold silver trade, because someone must be worried that he's thinking about not, I don't know what the drugs they're on, but they're thinking that somehow they're going to stop quantitative easing. I just don't see that as possible, but that's a possibility. I mean, look, there's all sorts of rumors out there. I read a rumor this morning that someone said that Trump is considering executive orders to move, and I don't think he can do this constitutionally, but whatever, but to say cannabis is legal so that banks could, get rid of the federal prohibition on cannabis. And the reason he would do that is political, to take away that issue from the Democrats. It would actually be a brilliant move. Now, I don't know that he's smart enough to do that. Frankly, I would like to see him do that, because it's a personal issue that I care about. I think that cannabis being illegal is really, really bad for so many different reasons. It's crazy. And so maybe I'm talking my own book or my own thought process,
No,
but I thought
Dave,
that was very interesting.
yeah, so I'm just going to clarify really quickly. So you're not talking out your neck or anything. That is something that we've known for a long time from our consulting with Sultan, is Trump is very pro-cannabis, and there has been a ton of things to move that forward. He's also very pro-blockchain, and he's done a ton to move that forward, as much as I hate to admit that.
Yeah, well, I mean, look, at the end of the day, the fact is, the only things that are really going on, the biggest single difference that is taken shape over the last 2 weeks, which I can't for the life of me understand, is how the Democrats in their convention literally didn't mention the riots. And cede that ground to the Republicans is, I mean, it's crazy. I mean, I know that they think that people are going to make the connection the riots are against Trump, but I don't see how you can say that when they're always triggered by violence, right? By violence generally in Democrat-run cities against people of color. So it's very, very hard, and it's a strange situation. But it feels to me like that you're going to see opinion polls in the next 2 weeks that are going to make this election look a shit ton closer than it looked 2 weeks ago. That I'll make that prediction. I'm not saying who's going to win or lose, and I'm just saying the opinion polls are going to show this.
Yep.
I would happily take the other side of that bet with anybody who wants to take the other side. I just don't think there's any way that this goes without it, because people, and I've said this before, when it comes to elections, when it comes to a lot of things, when it comes to the stock market, the thing that you always have to be aware of is the human limbic system. What do I mean by that? We are genetically wired for flight or fight. When we're happy, things go, everyone's happy, whatever. The instant you feel unsafe, your entire brain is wired to shut off, and your limbic system is what takes over. That's why correlation goes, among other reasons, correlation goes up when there are crashes. That's why crashes look like free falls. People are panicking. That's why margin calls are the way they are. That's why melt-ups happen on the short side. Tesla is a great example. I mean, there are people who are thoroughly wiped out shorting Tesla because they thought it was obvious. But the fact is nothing triggers the limbic system more than the fear of your physical safety. And there are people all around this country that are fearing for their physical safety now for the first time in years, many, many, many years. And don't underestimate
David,
that.
Real quick, this is Jeremy. How's it going? What do you think is a catalyst for that specifically? I mean, like, what events? Let's talk about events that could transpire.
Well, I'll tell you.
I would agree with you.
Three events that have transpired. You don't have to do could. When you have people with bullhorns in 3 different states going into suburban neighborhoods and screaming at people saying, "Your house, you get out of your house, or we're coming for you." And then you you have a Democratic platform plank that expands the Obama-Biden plan, which says we want to put people into the suburbs. that frightens people. Forget piss people off. I mean, backlash is inevitable whenever you go too far in one direction, but that's the sort of thing that is a big deal. And I think that, any strategist who doesn't understand that, it was not a particularly close election, but it looked, I mean, I'll never forget this because my mom, who when she died was a Rush Limbaugh loving, Sean Hannity loving Republican, voted for Hubert Humphrey in 1968. Right.
Interesting.
Hubert Humphrey lost to Richard Nixon because of all the riots and people feeling unsafe in middle America. Just, you don't have to look back in history that much. And people who don't understand history, people, when they feel unsafe, do strange things. And
yeah,
so,
but here's the difference, Dave, and this is where I'm getting to what could happen. I hear what you're saying, and things are happening, but it's not affecting the financial system in the way that it should. Like, if you look back historically, when there's riots, it has a direct correlation, obviously, to the pricing of, obviously, the assets and the markets pretty much immediately, right? And this is completely different.
We have a broken,
so that's what I'm saying. Something else has to happen.
Broken.
That's what I'm saying. Well, something else has to happen. Now we need to think of a new catalyst, is my point, that can really push this thing down. Like, let's go back. What happened on March 12th, March 13th? What happened on that day to get people so scared? And obviously we already know what it is. It's COVID. It's like the fear of the unknown versus something that's very tangible in front of you. That is somebody rioting or somebody picketing at your house. That's tangible. But when something's invisible and could infect and kill everybody, obviously that's a much different story.
Okay, I'll tell you what it is, Jeremy. I'll even tell you the date.
Okay, please.
There's one event that's happening on August 29th, nationally, and it's, actually, maybe I'm wrong on that. There's two events. It's you could look on these on Twitter, but one is the, I guess, take the day off of work, take the day off of spending. And it's, I guess I've heard, I'm not going to say what organizations have been pushing it. You can infer for yourself. Like, because I don't believe anything I hear on Twitter. So there's that event, which also coincides with the Occupy the White House movement, which I believe are all the beginning of September. So I guess if people were to start to see 10 or 20 or 30,000 people camping outside the White House and people actually did not go to work, those that are working literally didn't show up for work, and Amazon wasn't ringing the cash register. Now, I know this is a hypothetical, but those are the kind of events that I guess put those scare tactics in, a la what I'll call the George Floyd riots, where it was national, versus these past couple incidents were seemingly just in Chicago, downtown for one night, or it's in Kenosha, Wisconsin, some tiny little town where, but I think that's kind of the whole point of the Kenosha, Wisconsin. It's like, okay, this isn't a big city. It's some smaller city where, I don't know. I mean, I haven't been there, but, well, I've been there in my past, but, seeing car dealerships just get burned down. And when people get nervous, I agree with David. Like, the number of firearms sold this year is greater than the number of U.S. citizens. I guess that should tell you something.
I'll put it in perspective. My wife and I just wanted to go to a local gun range to take classes, not to buy a gun, but to go to a local gun range to take classes. We are still in our 45-day waiting period where they're doing background checks on us just to be able to go to a gun range, because as the local police department in our local town in New Jersey told us, they have never seen the number of applications like this. They were completely mind blown. It's orders of magnitude, like 100x the number of applications they've ever seen before.
David, I believe you. Like, I went to Walmart way out in the suburbs because you can't, there's no firearm or ammunition sales in the city of Chicago. And sorry to go off on a brief tangent, but so they're all right outside of the city. And I went one day to get some shells so I could take my son to the shooting club. The line, the line to get to go to the little tiny sporting goods section of the Walmart And this was a random day, like Tuesday at 4 o'clock. There was 10 or 15 people, and there was no riots, no
That's
nothing,
crazy.
just a total random day. And the oddest thing was the firearms department or sport, their hours are from 10 to 4:30, and then I took my son to get ice cream afterwards, and they're only open from 10 a.m. to 1 p.m. I'm thinking, gosh, so after work you can't get ammunition and you can't even get ice cream for your after lunch snack. I'm like, it's kind of a fucked up world we live in. Had we gone a half hour later, you couldn't get bullets and ice cream, the new dinner date.
But what I will say is, from a financial system point of view, the thing that is most interesting is the financial system and the amount of money sloshing around it, and that's been bipartisan. Both parties have had easy money policies dating back to Reagan. And that's not likely to change. What changed in March was, faced with the obvious impending depression, and there's no way you could call 30% unemployment anything other than a depression. Yes, it was forced by shutdowns, but it doesn't matter. An obvious, a quick onset depression. They took out the not so obvious monetary bazooka, howitzer, battleship, call it whatever you want, and unprecedented amounts of printing money, which right now we're at a debt to GDP ratio, which in history terms has never, I'm going to repeat this again because I want people to hear this, no country has ever come back from a budget GDP deficit as big as the Western world has now gone to. The only one that that basically was able to sustain that was Japan, whose debt GDP ratio went much bigger, but their market is still, what is it, 50% under the all-time high? It turned into a zombie market for years and years, from the early 90s to today.
Yeah, you are right. Nick Leeson, that was the Nick Leeson times.
Yeah, that's right. Yeah, and so look, the reality is that it is pretty obvious from a financial point of view that as long as the dollar is a denominator, you're going to see bullishness as long as we print money. From a real economy perspective, however, you can't print jobs.
Tomorrow.
David, right? I think you said it more eloquently than me, but it's what I want to literally write a book on. It's called The Tale of Two Economies. You have the stock market economy, which has hit all-time highs, where I showed a graph months ago of initial unemployment claims and the NASDAQ, and there was an 80-some% correlation. Does that make sense? No. But that said, you have one economy where it's like, man, I wish I had more Tesla. I wish I had more Bitcoin. I wish I had more silver. You have the other economy where it's like, man, I wish I had something to eat, and I guess that's what I call the tale of two economies, so to speak.
I agree. I mean, I don't know if you watch, was it Ryan Young? Is that his name? Anyway, there's a comedian who does some really funny stuff. He had one on that. But yeah, I think look, the thing is I'm not sure that we're even close to the end of that divergence. That's the thing. I mean, we're set up to have a lot of divergence. The thing that is the scariest, or should be the scariest to people, is if you end up with a situation with someone like Elizabeth Warren as Treasury Secretary, and a situation where the 25th Amendment gets invoked and Biden's no longer there, that could be the thing that ends that divergence. The sad reality is ending that divergence without the real underlying economy improving isn't so good for financial assets. That's your negative hellscape. I'm not saying that's going to happen. I'm saying that is the negative hellscape. The positive is it just keeps going, and people keep printing, and it keeps going until the point where people just can't take it, or as other people who I talk to say, people effectively freely revolt. Hopefully that doesn't happen either. But there's a lot of room in between the two, and the most likely scenario is none of those events happen.
Well, the one real world where the event that reality meets Wall Street, as I say, is the impending, the stimulus that was supposed to, the third emergency stimulus, where the Senate or Congress kind of left all these people in limbo of not having their $600 to, maybe getting something. The rents are going to continue to be due, and there's even, I don't want to say protest, but there's starting to be talk about people like, hey, let's not pay the mortgage or let's not pay the rent. And it's like, okay, well, guess what? So if I don't pay the mortgage and you don't pay the rent, then guess who owns it? The bank. And what do you think they're going to do in the end all be all? Well, they're going to kick you out or they'll kick me out. And then two of us have a problem. Now, oftentimes we talk about, well, which way is the market? You know, is gold going up or down? Silver going up or down? Bitcoin? And we sometimes, as David pointed out, forget that there's consolidation periods. And moving to Tether didn't necessarily mean, hey, I'm getting short. It just means that I was fortunate, you were fortunate enough to buy some things at lows that were just taking some off the table, an asset that has a lot less volatility, so to speak. And maybe gold trades between 1900 and 2000. Maybe Bitcoin trades between 11,000, 12,000. Like if it traded at this same price for 2 weeks or a week or a month, I don't think that's necessarily bad. Where, you know, you have 90% of the moves happen in 10% of the time. There's a fact.